Good morning, everyone. Great to have you here. What we are going to do today is we are going to recap a really interesting topic, which is data monetization and data strategy. We are going to have a really interesting guest today. I'll provide some context. So Pavel Schamberger we have met many years ago. He'll introduce himself a little bit, but he has a really, at this point, long history in the Philippines, specifically financial sector. And with his background in risk analytics in banking environment and data partnerships, he's really interesting guest today. So we'll in the second part, I have a few questions ready that I'd like to ask in the open, and so everyone can learn from what he has done in his career. And we have a little bit of context on how we have met. Pavel was a customer of ours. We have done our first implementation in Philippines with Meiro in really interesting scenario with one of the well-known lending or banking players there, Home Credit, originally Czech company. A lot of Czech experts in the brand, in the team. There are some are still there, or some are there again. So a lot of great people we know, and we have done really interesting project there that effectively was around data trading with a local telco and enrichment, and we'll hopefully hear a little bit more about how that impacts, what kind of value that does this create for the bank or for a financial institution like this. So this is really interesting. And Pavel will have a short presentation, then we'll open to Q&A, and I've got a few questions ready. But if anything you want to ask in the meantime, please do put it in the chat or in the Q&A. There's a question already from Hinek, I think. If a recap will be available to download. Yes, we are recording, and we will email it if you can't stay for the full duration. That's absolutely fine. We'll be sharing this. So also use the Q&A for any questions you might have. You can ask in advance if you see something interesting, or Pavel mentioning something interesting you want us to come back to later. We will be happy to do that. So with that, Pavel, over to you. If you can introduce yourself a little bit better than I did, and let's hear it from you.
All right, thank you, Pavel. Thank you for kind words introduction, also inviting me, and thank you all for joining, that you are interested in this topic. So let me fire up my slides. I will try to keep it not very heavy, just some summarization. And yeah, it generally quite corresponds with my journey, especially in the Asia, where I first came in 2016. Like I guess many of you can guess that. And actually, I'm always saying, if you meet some Czech people in Asia around the fintech space, usually, like, the chances are they might be coming from Home Credit, which is exactly my case. And yeah, now I'm with Skyro, which is, I would say, pretty much competitor to the Home Credit. Of course, we trying to long-term position ourselves a little bit different, let's say better. But currently, I mean, the business case and business approaches is quite similar, because given the market's condition, etc. I think we can already jump into that. So yeah, please, if you would have any question, or you would be interested in kind of getting deeper into some topics, happy to elaborate. And yeah, agenda, it's only like 4 slides. I try to, some kind of bigger blocks, kind of capturing the essence, and it's also kind of like timeline, so it's like testimony to certain times, as I remember it, but I believe yeah, the correlation with reality is quite high. So jumping into that, really coming here to the Philippines in year 2016. Of course, like to give you like super quick overview of the Filipino market, it's actually a great market for loans. Really, it's very consumer market, and to some extent might be similar to America, like US attitude-wise towards the credit. The credit is not something to be ashamed of. They like to spend it. Actually, getting a credit means even like status symbol in the kind of lower segments of the population, that I'm better than you, that actually I'm getting the credit and you not. But getting back to the year 2016, the mission. So with this, I'm trying to say the sales of credit and financing of the gadgets, phones, appliances. The sale is not a problem, but the problem is to manage risk. And the population is over 100 million people, and basically data are not much available. It's quite different, coming from Czech Republic, and I think a lot of people on the call, we have, assigned unique identification number since birth. We have, the trace, you can cross-check the person. It's not really happening here. I believe there is like 9 to 10 unique IDs at different level of quality, and some people doesn't even have those IDs, not really any data source covering all of it. And I mean, my mission was to hunt for the data, especially for the credit evaluation. And, actually, it was kind of difficult. There's a lot of mistrust on the market. There was not yet proper regulation, and actually not even that much data available. You can imagine that there were some like systems capturing the data, but nobody was pretty much ready for it, and also giving the reasons above, nobody really wanted to share. Everybody kind of scared. You wanted to steal the data, steal the customers, etc. So it was a really difficult time. And when you think it's not cannot get worse, it's actually got worse. But luckily, it was just like a little roadblock, which eventually helped to drive the innovation forward. So they actually came regulation in place. And it's been in law since 2012, but actually it came into the effect in 9 September 2016. And even those kind of cooperation we've been developing immediately stopped, because everybody is like, now we need to reassess what is happening, if we can do it. And I believe everybody is pretty much now familiar with the GDPR. It's kind of global way of treating the data. But in the Philippines, they also added the jail time. So you can imagine it didn't add to the cooperative of the spirit. And nobody wanted to be first to go to jail for some violation of the data privacy regulation. If I'm well informed, I think nobody yet went to jail to any data related issues. And looking backwards, this of course brought the clear framework for data sharing and establishing the trust on the market. But at that time, it basically stopped anything for a year or even longer time. So my mission wasn't really smoothened by this thing. Actually, it prolonged everything. But of course, looking from it from today's standpoint, it helped to set the clear rules. All the principles of the data sharing, being the data controller, data processor, etc., etc. So coming back, this was quite helpful. But of course, we didn't view that clearly at the time. And actually, like the dawn of the external data adoption, as Pavel mentioned, this like through lengthy negotiation, we actually been able to develop and push through with the integration with the telco score, and getting the data from the telco, which was a huge thing. Again, in the Western market, this was already quite a market standard, but here there was no telco score available on the market. And even now, it's pretty much the only data source which covers 100% population. If you combine two major telcos, you're getting like 95%. So it was actually like big stepping stone available, for any credit scoring. And also, not to make it easy from like Czech market or the Western markets, the majority of the SIM cards or subscribers are the postpaid. But here, in majority, is actually the prepaid guys who topping up like a few bucks every now and then. And you don't have any proper name attached to the data. But anyway, it did help tremendously, and even now, it's one of the major data points which every, I think, player in the banking or fintech sector in the Philippines is consuming. To give you a little bit background on the cooperation, of course, it was like the first ever on the market, first for us as a financing company, first for the telco. There was a lot of things we discovered along the way, which are not perfect, and Meiro actually helped us quite a lot, mainly on the backend data transformation, data processing side, and really to share with you. I mean, we are in this space when data sharing is not a standard. There is the new data regulation, and you working with the telco data, which by nature is very sensitive. So that's I added this meme here that we already started, like from one of the toughest nuts to crack. But yeah, thanks to all involved, we've been able to do it, and to document that it was not very easy. The telco operates in the private Amazon web services. There is no connection to the external internet, and if I remember correctly, the whole solution have to be like self-deployable, and then this package which basically deploys and then starts loading this terabytes of data and processing it, transforming it, also the encryption level APIs and everything. So even even now I'm still impressed we've been able to do it. And yeah, if I'm correct, I believe the solution still online with the home credit, even though I left a couple of years ago. And yeah, we even like design it in a way that we can add additional scores just by adding new column in the API, and by adding the parameter like the name of the new column, be able to consume additional score, not needing to edit or touching the solution. So given these constraints, you really try to factor it into the solution, and yeah, it was really helpful, because you can imagine then getting all the solution inspected by the security, etc. It was really heavy, but yeah, we made it. And just the last bullet point here, also we discovered along the way that the data are not the perfect shape. There have been some editing of the data, I mean the historical data, changing it with like basically rewriting the historical data, which then creating a lot of bad stuff generally. And there was more we can discuss then over the beer or something, because it was yeah, kind of funny stories which did not sound that funny at the time, but looking back, it was interesting. And yeah, ever since, I believe it pretty much became the commodity, and generally the risk data or risk related data, now it's way easier to get it here from some companies. Even now recently the C group, which the main business in the Philippines is the Shopee marketplace, they came up with their own score. So now even the companies themselves, knowing that they can monetize the data and there is market for it. So this was something like great development over a few years, and yeah, helping tremendously in our business. And I think this is the last slide. So really coming here from with like not any available data, then getting some data to pretty much, it's still not ideal, still hard to validate like the identities of the people, but still there is lot of data points to somehow cross-check the borrowers and do some very solid decision. So what I'm focusing next in the terms of data sharing. So what I'm seeing the trend on the market is really the embedded finance, or you can choose other buzzwords. But generally talking to like big companies, big players on the market, like 7-Eleven, I believe you might know it. They are across like half of the world. Here, I believe they have like 5,000 stores across the Philippines, and they have like 60 million clients, perhaps, which is like half or even more than half of Filipino population. They have certain data. They don't have like every single purchase, but through the loyalty and some other touch points, they have some data available, and they want to monetize the base, right? And actually, the loans are one of the best ways, and especially if you basically generating the leads and you don't have to be responsible for non-repayment and just getting the provision or some fee business. So that's really tempting for these players, but they already also conscious about not losing the customer or not sending it to some other app. They want to keep it pretty much inside, which makes sense because if you see the blue text at the bottom of the screen, really, I mean, getting the loan, getting financing is not the goal itself. It's really just you want to purchase something, right? So it's like mean to your desire or to your need. So it makes sense to give the customer like at the places where they can actually spend. So yeah, it's a great project we've been running with 7-Eleven, getting access to the data, and customers not might even know it's happening, but by the time they click on the loans button and seeing some offer, there's already some data processing running behind, some pre-selection, and now it's still not like fully embedded finance. We only been able to do some kind of web view after you click on the loans button. But we see there's a big potential, and giving, for example, the Palawan Pay app, which is like the digital arm of the local remittance business Palawan Express, which again they have like 20 million customers, online, offline, even more. So they already collect the eKYC. So actually, again, the overall regulation in the Philippines is quite pro-business, the data sharing, but also the eKYC, which can be outsourced, that basically we can already accept their initial KYC and not to KYC customer again. So I think this is quite revolutionary for the Filipino business here, because again, this market is still less developed and general user experience is really bad. So doing it this smoothly, eventually, it's a great potential, and we're already seeing that there is like a huge demand. So actually, it's doing the data sharing not for the sake of data sharing, but really already offering immediately the product to the customer in their favorite touch points, and it's working quite well. Also, to share with you, we plan to launch pretty much something similar with a third telco on the market. So I believe now everybody, when they having some meetings and thinking, how to monetize the loans, is usually their first idea, and it's still not super easy to lend fully online here on the local market, because that's actually the main, I would say, business model of the home credit, which was developed across the different countries, introducing the first product loan, really meeting person offline in the store, paying 20% down payment, and then get rest finance, for example, the mobile phone, and then basically collecting or observing the repayment data, then you might get a cash loan. So actually getting the cash loan as acquisition product, nobody's really able to do it profitably. We on the product level already able to do it, but it's thanks to the data sharing and having access to the partner database. Because if you just open it on the open market and market on the Facebook, then it's not really attracting the good customers, and a lot of fraud is still happening. So we believe we pretty much like unlocking new stream, new business line, which is not super revolutionary from the product standpoint. It's still the cash loan, but really we like that we able to do it through this. Now it's like semi-embedded finance, but hopefully it should be a fully embedded solution, which is somehow like transformative for the market, and it should help us basically getting access to the good customers. And same time, for these platforms, it's additional way to monetize. And for example, if you give loan to the 7-Eleven customer, the chances are they spend some part of the money in the store. Same for Palawan Pay, which is mostly the payment app. They basically disbursing the money into their ecosystem, so we're boosting the overall liquidity there. And the good thing is already a lot of players tried to lend themselves, but if it's not your core business, it's super difficult. You need smart, expensive people, to develop all the credit risk models, etc. So now, good thing is they're not trying to do it themselves and basically enabling other players to join. And currently on these partnerships, we are there like only sole provider, but basically partners are quite clear they want to introduce the competition, right? Which makes sense from their perspective, having more players because everybody have different risk appetites, so eventually they're able to approve way more customers. But we also looking into developing some kind of broker on the local market that basically will be unified application form, and it would already through API talk to different providers, and basically everybody should say yes or no with some product details, and the customer can choose, which is something I think coming in the next few years. And yeah, this is pretty much all thanks to data sharing. So yeah, I'll think I'll stop talking, but really, this is I think huge progress in the Filipino market coming from like 8-9 years ago. No data sharing was kind of scary thing to say because you could tell if you ask, hey, do you want to share data? Do you want to monetize the data? Everybody like immediately by the body language was like, it's something bad. It's not supposed to be. And now we actually able to offer this in embedded way in the big partners. So I hope this trend will continue, and yeah, there's gonna be more data we can utilize. And I think I only haven't even have to mention that it's all by the regulation, having the consent from the client, having the data sharing agreements, etc. It's like pure standard. So it's all happening, and I believe it's in favor of the clients. Yeah. So this is the start of the discussion, and I hope you find it interesting. You're gonna have some questions.
Super, Pavel, thank you. I would like to start off with a couple questions that might seem a little bit basic to you, but I think for someone who is new to this area, this might be kind of a fundamental, bricks to lay. So, you were talking about where is the data in the beginning, right? And the telco partnership. So let's maybe clarify what is the data, what are the type of information that that kind of as a financial institution who has this financial product that you might be interested in. What is it you are after? What would you like as a bank or as a lender, credit card company? What would you like to know that you don't already know? What would help you?
Yeah, good question. Start from the beginning. So I think in the ideal world, there would be like one ID which you're able to validate, basically establish the identity of the customers in the first step, and then knowing this is with high chance not a fraudster, which is like some first layer of the verification. Then basically you want to evaluate how much to certain person offer the loan, but same time the pricing, the interest, etc. Because the better customers would not be interested in some small amount, and also if it's like expensive. So it's multiple layers. So then it helps you really. It's the whole thing is kind of proxy, knowing how much this person earn, and how much they are basically able to repay. There is even regulation, of course, that you need to consider, basically the debt to income ratio, but it's usually always approximation. And if you ask the customer in the application form, the chances are they're gonna boost their income because I mean that's the usual way. Of course, the men boost their income more than compared to women because of the nature. But generally, really just establish the identity of the person, then having access to the credit bureau, which is in the Philippines, but it doesn't work perfect. But to be fair, they did some good improvement, but you cannot find everybody there. You can find like approximately 40% of the people, maybe less. Data can be quite dated. So then really you pretty much like getting all the pieces, all the puzzles together and trying to make the best decision. And of course, you sometimes do wrong decision that you approve somebody who will not repay, but same time you might be able to disapprove somebody who might be good. And that's also like think that like general approval rate for the offline business is 50%. So imagine you have 50% people which want your product, but you're telling them no. Like it's kind of counterintuitive, but you
Sure.
need to basically like save your business. And really to be specific instead of more high level. So with the telco, you really see the behavior. Usually, I think from experience of many colleagues and many businesses, usually the best proxy in the telco data is how old is the SIM card and active. This is really like some approximation that this person is somehow stable in life and not throwing away SIM every 3 months, etc., etc. And then you see some behavior. Of course, there is some intuitive like features you might want to include, but after all, it's really like training the statistical model, which tells you what is the important stuff to predict the repayment. And sometimes can be even like less obvious. Sometimes it can be that they buying some value-added services or they uh, are active at night or not, because it can indicate they working on some US job, US time zone. So it's really sometimes it's kind of a lot of discoveries, but generally the best are the transactional data, which give you some idea how much this person spent, and the best is they spend regularly over a long time, some kind of stability, etc. So it's not a rocket science, but at the same time it is.
Well, I think the access is the difficult part, right? Access and the ability to the data quality is the rocket science, and the discipline itself is not really. So look, that's clear. So this is telco. What other data would bank be interested in? Is there some sort of behavioral data? How rich can this be, or can this be rich enough? Is there something like too much data in this?
Uh, yeah, it's a good question, because at some extent, like at some moment, even if you have new data sources, they can pretty much tell you the same. You can have the bills repayment, and then you have some spending, but then it pretty much tells you like similar thing. So at some point it can become correlated, and same time you missing some other part of the story. But with this behavior data or some other types of data, it's usually somebody's idea how to somehow replace the data which are not available. So you can generate the data yourself by introducing more questions into the application, etc. But same time, you don't want to do it. You want to keep it as short as possible.
Sure.
And then really the monetary transactions are the best, or seeing basically your salary coming in.
So,
That's the usual banking use case you've been solving many times. Do some marketing campaign to make your bank the primary bank with a salary, right? It's usual some kind of interview a business case. But again, here in the Philippines, a lot of business is not very formal. They pretty much getting some gig jobs, driving scooter, doing something else. So, and a lot of economy is still super cash heavy. So you don't have visibility on like a lot. So you need to make a lot of approximation. And yeah, there is big e-wallet, Gcash, major player, but unfortunately they aware of their dominant position, so they don't want to share the data. So that's a bit of a shame, because that would be also very helpful. So yeah, and perhaps also, if I may share, one thing is that uh, you can have data available, but they can be quite expensive. Meaning that the usual approval process is that you inquire the data in some sequence, and at first you're trying to use internal data, for example, because they are usually less costly or even for free. So of course you're cross-checking some blacklist databases from previous customers, having some sanity checks if this customer is legal age, nationality, etc., etc. And then basically you're trying to cascade some cheaper sources which can already disqualify some portion of the customers. And only when you think there's a good chance you actually can approve this customer, you, for example, buy the telco data, because it's one of the costliest So it's always the cost benefit analysis pretty much if this data
Sure.
are usable or not.
That makes sense. And question on how do you, quantify the results of this? So I would imagine a simple workflow like this. You have a model that has a certain number of parameters right now or data that's coming into the model. You optimize probably for two outputs. One is the rate of approval of the loans, and then eventually the ability or percentage of fully collected payments, right? But that sounds like something that takes time. So how do you evaluate if a new data set that you acquired adds value quickly? How quick is that process?
Yeah, it's actually a very good question because the whole business, and I believe anybody who's like from the banking space or finance space, it works pretty much on the vintage base, right? And usually group the vintages into months, for example. So all the loans issued in January, February, and then basically, yeah, you wait 1 month to basically see what's gonna happen. And also, it's like not to make it easy, there can be some big outage of major payment channels. So actually, some people even who would like to pay, they cannot. So it's not go in this direction, but just in the Philippines, there's sometimes some surprises which can just not be like pure default, but it can happen also given some technical difficulties. And maybe just to do also one step ahead, even before basically deploying new data into the production, we're doing some kind of back tests. So usually we like to share like 20, 30,000 customers, which we already know if they repaid or not. And basically we trying to get for them the data at the point we've been considering them back in the time. So it's kind of looking back and then we simulating if at the point of decision we had this new data, how much it will help us. And if it's it makes sense, then usually risk team needs to mix this new data into the into the models, and then you deploy it like gradually at like 5%, 10% of the population, just to see if there is nothing majorly wrong. And again, as you mentioned, then you monitor the approval rates because usually sales want to increase it, so it's like a little bit natural, not conflict, but friction between the risk guys trying to keep the risk numbers down compared to the sales guy, which it helps them the approval rate. But ultimately at Skyro, how we doing it, and of course different companies have different approaches. We trying to calculate the net present value. So basically it should enable the risk team and sales team to be pretty much in sync, meaning we given you're predicting the risk at the time of approval, and also the product parameters, the cost of servicing the customer, and then we pretty much trying to approve only profitable customers. But of course this is just the prediction or estimation of the profitability, but this is basically allowing everybody to be optimizing one metric and not really fighting over different metric and shouting at each other at the office. And of course you need to make this metric as precise as possible. So a lot of updating the costs on different parts and costs for the data, etc., etc. But I believe it's quite good metric because at the current stage, of course, I wouldn't say small anymore, but also not super big. But we're growing, right? But we're trying to grow sustainably. So this is the way really trying to approve customers who are at least positive a little bit, and then we can cross sell them, which is another way to make money. Because of course you can make decision, hey, let's approve also guys who he might be losing some small amounts. But yeah, it's a difficult discussion. Let's not go in this direction.
Understand. And another question, I want to kind of flip the tables a little bit right now. So kind of clearly the value is in the entity that owns the data, right? In this case, we were talking a lot about telco. How to think about it if you're a smaller business? Think publishers, retailers. They capture a lot of customer behavior, a lot of user behavior. These users are identified. understand that there's a game of scale where this starts making sense. Like you're not gonna, as a lender, you're not gonna talk to like a company that captures 1% of the market, right? That doesn't really make sense for you. But how do you think about it? And not necessarily maybe from a banking perspective, if you kind of could think about it from like a product owner perspective, from any other company that finance, and you own a lot of data. Give you maybe example. Typically retail, just struggling with margins, trying to find alternative revenues. They sell insurance, they sell every other product they possibly can. They obviously include financing and make profit on that, right? So kind of it's really pretty obvious that retail doesn't really make sense, doesn't make money on selling the products anymore, but everything around it. So how would you think about data monetization? What opportunities do you see for brands, small and medium size, and now and in future?
Yeah, very good question. And as you mentioned, the scale is important, but I think it's more important on monetizing the data for the risk purposes, really like pay per API call. So in this case, if you kind of small business, it means the hour hit rate, for example, if you ask about 100 people, you might know one of them, or maybe even less, right? So that's not ideal, and it also need to be considered. Some data might be great quality, cheap, but then you have very low hit rate. So this doesn't work that well. But the second thing, which was corresponding with the last slide, is really proactively offering the customer. So even if you have a small database, of course, the bigger the better. But then you can make some exercise with financial company, lending company, or I don't know, some BNP players, and somehow pre-qualify them, or basically isolate a part of the database which have a good chance to be approved. So of course there's going to be some very good affluent clients which are not interested, and sometimes there might be some bad clients which have a very small chance to be approved. So it's bad customer experience. So it's good to pre-select. It can be 10%, it can be 50%, and then you actively offer them the financial product, right? And it's then usually not pay per ping, per pay data, but usually the business model here is some fixed fee, which is like 10, 20 times more, or even the percentage of the loan itself. So then even if you're not the biggest player on the market, you can still monetize quite nicely and open the door into the financing companies. And of course, it can help to increase the size of the basket, or the chances are the people will spend more if they have some additional firepower. So I think this works well. And yeah, if you would be this kind of business in the Philippines, please we can talk.
I think always in the market for new data, right?
Yeah, that's my lifelong mission so far.
One last question. I think we'll be closing up the session. So we mentioned before that the entire project that we did was possible because we were able to deploy it in the private AWS installation within Philippines. So it's compliant and regulated, obviously from both sides, because in Philippines the telco is regulated differently and the bank is regulated differently, right? So this is setting the stage for this. What's the role of IT in this type of discipline, and how do you see IT helping or supporting or not, or being kind of maybe complication in the way of doing this type of data enrichment?
Yeah, it's true. Like, I mean, it can be helping, it can be blocking. Actually, same goes for a legal department, or sometimes somebody's very very defensive, trying to stay on the safe side, which makes sense. Then it's really about discussing and clearing any concerns, etc. But with the IT, I would say it helps obviously if the company runs on the new stack, if I put it like that. For example, the third, it's quite a new telco on the Filipino market. Obviously, they're running on cloud new systems, so they're able to share the data securely through Snowflake, for example. Which even knowing people Snowflake and that they able to do it, mask any identifiers natively, then it's helping a lot, because otherwise you might have some little bit legacy IT with all respect, and then they might be thinking or Googling how to properly hash the CSV file or like Excel file. And given they don't know it, they never done it in introducing a lot of delays, etc. Of course, we're trying to help, but sometimes they don't tell you right away, right? That we don't really know how to do it. So yeah, but generally the IT guys have nowadays quite good knowledge, especially those like who own the database. So it's not a huge problem, but I mean it can be sometimes. You know it
So
yourself.
so so this is really like a very, very close neighbor to IT, right? It says this the risk and everything that handles data. So one last question, quick one. Obviously can't avoid AI here, right? So how are you thinking about AI here? I'm kind of thinking there are two opportunities. Obviously the algorithmic, the scoring itself, right? There's a new techniques for available. I think this is discipline that's very, very mature, and I'm not really sure how much that can, how big leap it can take thanks to AI. But the other thing that's probably useful is data generation, right? So you can create new data out of existing data sets, so probably new type of metrics. So there's kind of a couple opportunities I could see, but this is really not my domain. It's just I'm extrapolating something I see generally. So how do you think about AI, and where is this space gonna go?
Yeah, I think there's like infinite number of use cases, many which I don't even see. But generally with the risk, and I'm ex risk guy, but maybe not like super true because those guys are very conservative, very defensive, which is their job, which is great. But also like with the risk, mostly nowadays run on the logistic regression, which I mean is still quite sufficient if you want to be a little bit more modern about in the risk community. You can go with gradient boosting, which is similar to some extent. But the thing is that you won't have to have some kind of explainability what happens. For example, your approval rate goes down, risk goes up, or the model numbers goes wrong. So you want to know and be able to decipher what happened inside, which actually with the AI, perhaps you can ask and it will try to explain you. But even if you have some, deep learning, etc., black boxes, it's not good. And sometimes even regulator requires you to be able to explain your model. In US, I just heard, of course, I never worked there, but for example, you need to make sure your model is not racist. For example, you don't
Right.
evaluate any criteria, etc. So from this inherently, the adoption probably not going to be that fast. Of course, there are going to be some use cases, but I think you're very right with the data generation. And I can imagine instead of filling out the fields application form, it can be chatting or talking like with somebody who can actually somehow adopt to your use case and even modify the whole dialogue or make it somehow more natural, seamless for you, and send time from you the information needed, etc. So from this perspective, there is huge potential also on the customer support, collections, etc. But yeah, I'm actually looking forward what kind of transformation it's going to bring, because obviously something's going to happen.
Well, let's keep looking at it. If AI is going to take over the risk managers' jobs anytime soon, I doubt that, but I think it's going to be an important play that's going to boost the space quickly. Super, Pavel. Thank you so much for your time today. We're going to turn this into recording, and probably like a little text summary as well. We'll be sending over. There's a lot of people who couldn't make it apparently, but have signed up, so we'll be distributing this. And if anyone wants to talk to you about data enrichment, data monetization, and partnership, they can find you easily on LinkedIn, Pavel Schamberger, and in Philippines in financial markets. So thank you for joining us today. Appreciate your time.
Yeah, thank you so much, Paul.
Yeah,
I
have a
just
good
see
day,
one
everyone.
question from
Yep.
from
Oh,
Fazal.
sorry, I missed that.
Maybe super quickly, great question. Basically, using predictive analysis, churn, upselling, collections, of course. And actually, this is the use case where you can use some less traditional models, because basically, propensity to sell, to buy, the churn, you don't really need to explain it. You're just happy that it performs well, right? So here really you can go a little bit wilder and use it, and you pretty much can use the same data. So yeah, definitely But usually the first frontier there is data, and then once that works well, you move down the down the stream. But yeah, the cross selling extremely important for the profit making, etc. So yeah, sorry quickly, but I hope I answer your question.
Sorry, I overlooked that. Thank you, Pavel. And thanks everyone for taking their time spending this morning with us, and see you guys soon at another edition.
Thank you, everyone.
Thank you for joining.
Bye-bye.
Bye bye.